So to kick us off, my name is Megan Elwood. I am the Business Development Manager for Strategies Group. If you haven't heard of us before, basically 30,000 foot view of who we are a technology partner that works with construction, field service, manufacturing, distribution. And really our overall goal as a company is to add value to your business by offering a business software solutions, which is Acumatica. Essentially, our goal with this is to help you and also your customers run their business more efficiently. And so we have done something with this in the past with Kate before, and obviously saving money any way that you can, and just being aware of different tax incentives that are local, but also, you know, maybe if you're in a different state or something like that. Really just kind of our goal with this is to educate everybody on how you can kind of offset costs. And so software can be expensive sometimes. And so Kate's gonna, you know, kind of talk us through some of the different incentives that we can take advantage of as companies to maybe kind of offset that cost and kind of, you know, take away some of the burden. And people always get excited by savings, right? So especially if it's affecting your bottom line. So I'm not going to steal too much of the thunder. I love tax incentives. It's something that we preach about a lot and love to tell our customers about it. So I will let Kate take it away. She's the expert in it. And like I said, if y'all have any questions, drop it in the box and we will definitely get to it. So Kate, I'll let you take it away.
Thanks, Megan. Yeah, I agree with what Megan said. We'll keep this informal. There are no dumb questions. Ask as many questions as you'd like. Appreciate all of you joining me today and just the opportunity to share with you a few of the tax credits that we're seeing benefit businesses most in the marketplace right now. I'm Kate Davis. I'm with a company called Alpha Results, and we have specialized in tax credits for over 20 years now. The bulk of what we've done during that time pertains to Georgia state credits. And then about 2 years ago, we also added a team to work on the employee retention credit, which has had a lot of buzz. It's a new credit that's come about under the CARES Act due to COVID and can apply to any company out there, regardless of where you're located. So I'll be covering several credits on both sides. We've had the pleasure of working with Strategies Group and a lot of their clients over the years, and thankfully have been able to save several of them hundreds of thousands of dollars just through these tax incentives. So the other thing I'll mention is we come alongside your CPA to provide these credits. In no way do we replace your CPA. And really the reason we've done so well in our 20-year history is we come alongside the CPA to help fill in those gaps where they may not have the bandwidth or the experience or time to learn about these credits and specialize in them for their clients, but they know it's important and it's an easy way to keep money in their pockets, keep cash flow going. So your CPAs may not know about these credits. That's why feel free to ask me questions, and you can always link me up with them after the fact. So I'm going to go ahead and share my screen here. Hopefully it'll work. Okay, let's do this. All right, so today we're going to talk about a couple of those Georgia state credits that we specialize in first. But then if you don't have operations in Georgia or don't have clients there, the bulk of the second part of the presentation is going to be around that employee retention credit, or the ERC. So we're going to start with the credit that we do most often, which is specifically tied to software and technology, and that's the Georgia Retraining credit. It's really better to think of it as a software credit. This particular retraining credit is designed to offset costs of new and upgraded software and even equipment sometimes that you or your customers use in your daily operations. It's available to any business that has operations in Georgia and pays Georgia income taxes. So any pass-through entities would also be included here. And I would say we calculate about 300 of these retraining credits every year for various businesses in Georgia. It's a credit that pretty much every business out there is going to qualify for either now or in the future. Software is pretty much a required part of being able to stay competitive these days and keep your business operating efficiently. So it's a great opportunity to help reduce some of the investment costs that you have when you're either implementing something new or having upgrades. So here you can see some of the qualifying activities that if you or a client are experiencing these, it's likely a good time to talk about this retraining credit. So if you're moving from a manual pen and paper type of process using Excel to then adding a software platform, of course, there's a lot of training that goes on with that. So that's a great time to look into this credit. If you're switching technology providers, let's say you're considering implementing Acumatica, then it's a great opportunity because, of course, there's costs related to that. There's time that your employees are going to be spending away from their job to learn how to use the new software. And so the state of Georgia wants to incentivize you and reward you for taking that time and spending that money to help advance your business. You may even be upgrading to a newer version of an existing platform or purchasing additional features like an additional module that would also qualify. And then if you add more users or seats to an existing tool, that's a good opportunity as well. One item I'll mention that's not on here is in certain circumstances, equipment purchases that require training and are technical in nature can also qualify. We see this most with manufacturing companies or even our medical providers that are getting a new MRI machine, a new EKG machine, just because the technology around that is advancing so quickly. So those types of equipment purchases can also qualify. Let's see, so here's an example, just so you can see what the numbers can possibly look like. If a company installs a new enterprise-wide business system and they train 100 eligible employees, then that company is going to receive up to $125,000 in tax credits that year. That is taking those 100 employees that are going through the training times the max credit per employee of $1,250. So this can add up very quickly depending on how many employees a company has. And I will say we have clients that earn this credit every single year just because of the nature of their business. They're always upgrading software or adding something new. And then we have other companies that it may only apply to every few years. But either way, we tend to find that companies either buy or upgrade their technology much more frequently than you would expect. Here's some examples of just qualifying software. Anything from accounting, finance, payroll, benefits platforms would certainly qualify. If you've got time management systems, planning and scheduling software, that's going to qualify. We do quite a bit with construction companies, so your project management, estimating, job costing type platforms. We're seeing just a lot more activity there in the marketplace, of course, Acumatica being one of them. Customer relationships, CRM type systems, we're seeing more of that across various industries. That certainly would qualify. Any purchase order management, even POS systems in restaurants, and then production, warehouse, and inventory management. Of course, there's quite a bit that goes into that, and typically a lot of employees trained, so those are good qualifying softwares as well. So as you can see, it really comes down to essential business tools that are used in the basic operation of a company. Okay, for the benefits, we discussed this a little bit in the example earlier, but this retraining credit can provide up to $1,250 per qualified employee every year. It is used to offset 50% of state income tax liability. It can be carried forward up to 10 years. And we can go back and actually amend a tax return up to 12 months after filing. So if you or a client had a large implementation, back in 2021 or possibly even in 2020, we can go back and look at doing an amendment there. Last slide here is just eligibility. we're looking at Georgia residents that are going through training. They have to have been at the company for 16 weeks or longer for their training to qualify. And then we look at various costs that are going to help boost that per employee credit. Some of those allowable costs include development costs, vendor costs, instructor salaries, and the costs of having the instructors or consultants come in to do the training. We look at the salaries of the employees that are going through the training and give a percentage back for that. Then any costs related to materials or manuals or travel costs. Any questions on the retraining credit? I want to pause here just to see, because again, this is the one credit we do most often in Georgia and directly applies to any software implementation or upgrades that you're doing, whether with Acumatica and the strategies group or otherwise.
Yeah, there were two that kind of fit in perfectly, and you may have just said them, but I do think they're important, so I'm gonna ask anyways. So I know you had said this, but are there any specific like limitations to how many times we can apply for the tax credit?
That's a great question. No, it's an annual credit. Let's see, I've been here for almost 10 years now, and I have companies that we've done the credit for every single year that I've been here. So there's really no limitation. You can earn up to that $1,250 per employee every single year, and then use that credit to offset your Georgia state income tax liability. So there's no limitations in terms of that. The limitations would be right here on this slide currently on the screen, just as far as eligibility, needing to be Georgia residents that have been at the company for some amount of time. And really the purpose of that is to eliminate any onboarding training of new hires, because that's not really within the scope of what this credit is trying to incentivize.
And another question they had is, can a company apply retroactively at any time?
So, great question. And I mentioned that briefly, I think on the slide before. You can go back and amend up to 12 months after filing a tax return. You can go back and amend that return to add this retraining credit. So, at this point, we can certainly go back and amend any 2021 returns that might have already been filed. And as long as the 2020 return was filed, I would say in May of last year or after, then we can go back and amend a 2020 return retroactively to add a credit for some type of software investment and training that occurred back in 2020.
Gotcha. Perfect. And then one last question somebody else had. So in terms of the retraining tax credit, what does the process of filling out the paperwork look like for the incentives? Because obviously I know sometimes, paperwork can kind of be a deterrent, but what does that kind of look like? Where do we find it?
Yeah, that's a great question, and I haven't really addressed that. Unlike some of the other tax incentives out there, like the R&D, research and development credit, and some others you may have heard of, this is not a labor-intensive credit by any means. We do everything virtually via email and a couple of phone calls. We are basically going to request 3 items from you in order to calculate this retraining credit. We're going to ask for, number 1, any invoices showing the costs that you've incurred. Number 2, we're going to ask for copies of instructional training material used. We don't necessarily have to have logs of where the training occurred or prove that the training occurred, but once we submit that instructional training material with the proposed credit, it shows the state, how much was learned and how much material went through. And so it helps substantiate the estimated training hours that we're going to submit, whether or not those training hours were documented. And then the third and final item we ask for is just a simple Excel file. It's like a payroll template that gives us the hire and termination dates of your employees and their salary or wage rate, so that we can help calculate that per employee credit. So that's really all we collect. And then after that point, we will run that per employee credit. We get it signed off on by the state, and then we send you and your CPA a copy of the credit. And then I know a question we get quite often, well, what's the cost going to be to me? And just so you know, Yes, it's an important question. We charge a flat fee of 25% on a contingency basis for any credits that we deliver. So there's no charge up front for us to, kind of start digging in and seeing what the opportunity looks like. And only once we've delivered you a credit that's been signed off on by the state, at that point, we would invoice you for 25%.
Makes total sense. Those are the three that we had that came through for the retraining tax credit. So I'll let you go
Okay.
into the ERC.
Great. Yeah, before I do that, I've got just one slide each on the other two Georgia credits that we cover. I'm going to go through those in much less detail because I know they won't apply to everyone on the call. But you'll have my contact information at the end. And if you want to follow up with any other questions, we can do that offline. So I'm going to quickly share the other two Georgia credits we specialize in before we move on to the ERC. Just got one slide here on the Georgia job credit, and this is based entirely on your address in Georgia. You have to be considered a business enterprise, which is basically manufacturing or warehouse and distribution, to qualify for this credit, unless you're under a special designation in a certain zone, which I'll discuss in just a minute. But employees have to have Georgia withholding, receive W-2s, or be leased, so they can't be 1099 contractors, and work full-time, which is defined as 35 hours or more per week. You also have to offer health insurance to all your employees in order to qualify for this job credit. You don't necessarily have to pay anything on it, but as long as you offer it, then you can qualify. And the great thing about this credit is there's a little more flexibility with it. It can also be used against your Georgia state income tax, just like the retraining credit. Or you've also got the option in a lot of cases to use it against payroll withholding if for some reason you don't have state income tax liability that needs offsetting. Just like the retraining credit, this one can carry forward 10 years. And then the last point on here is really the most important, I think, as far as showing you what the potential opportunity is. There are certain zones all throughout Georgia, and again, we can just run your address and let you know if you fall in one, but there's opportunity zones, military zones, what they call Tier 1 lower 40 counties, where any industry will qualify, and all you have to do is add 2 or more jobs from one year to the next. And if you do that, then you are going to earn $3,500 per new job. And if you maintain those 2 or more jobs, then you're going to continue to receive that credit every year for 5 years. So all that said, if you have an operation in Georgia, or if you have clients in Georgia, feel free to send me your address. I can run it through our system and let you know if you might be in one of these zones to qualify. It's at least worth checking. Any questions, Megan, on the job credit at this point that you see before I move on?
Not yet, no.
Okay. Again, just wanted to touch on that. And then the last credit that we specialize in Georgia is the investment credit. This really is only for manufacturing companies, but I wanted to mention it because I know Strategies Group and Acumatica applies to a lot of manufacturers, and so it could potentially impact someone on this call. But as long as you've got a manufacturing company that's operated in Georgia for at least 3 years, they're going to qualify for this credit. Basically requires certain capital expenditures related to the manufacturing. It can be equipment that's purchased, or constructing a new building, doing an expansion, doing leasehold improvements. Any of that to a property would qualify as well. And you're basically going to earn a percentage back of the total CapEx that qualifies. Depending on where the company's located, you're going to earn anywhere from 1% to 5% back of what you've spent. This credit's a little different because you take it in the year following the year that you actually have the capital expenditures. But the good news is we can actually go back up to 3 years to take advantage of this. So if you or any of your clients are in manufacturing and have had significant purchases, I would say $500,000 or more over the last 3 years, then let's definitely talk. We can fairly quickly review your depreciation schedule and give you an estimate of what your credit might look like. I I've got on here an ideal opportunity is CapEx of at least $1 million, but I would say if you've had $500,000 or more, then it's certainly worth looking into. Any questions, Megan, that you can see on the Georgia investment credit before we move on?
Let me see. No, not yet.
Okay. All right, so those are the 3 Georgia credits that, like I said, we've specialized in for 20 years. We feel like we know them and we do them well. If any of those are of interest, please don't hesitate to reach out. Okay, let's go ahead and move on to the employee retention credit, which has become such a hot topic over the last year or so. My goal with the rest of our time today is to provide a brief overview of this credit. I'm going to refer to it as the ERC for those of you who may not know as much about it, but then also be available to answer specific questions from those of you who might have explored it or be in the process of trying to figure out if it's something that you qualify for. So we will go ahead and jump in. Here are some of the key details for this credit. Before I go over the slide, I'll just mention this credit came about as a result of the CARES Act back in mid-2020 after the pandemic started. And initially, there was not a lot of opportunity to take advantage of the credit because if you took the PPP loan, then you were not eligible. However, at the very end of 2020, I think it was like December 28th, they changed the legislation, and even if you took the PPP loan, you could also now qualify for the credit. So really, January of last year, the floodgates opened, and we just started seeing a ton of requests for this retention credit. The credit dollars add up very quickly. It's pretty incredible how many businesses out there can qualify. So if you haven't explored it yet, I highly encourage you to do so, whether it's with our business or with someone else. So I'm going to walk through some of these key details here on the slide. This particular credit allows an employer to recover via this credit between 50 to 70% of the qualified wages they paid during the time period that they are eligible for the credit. And it also includes health plan expenses. So they're going to get a percentage back on health expenses that they've paid. And that is up to $5,000 per employee during 2020, and then up to $7,000 per employee per quarter for the wages and health expenses paid in 2021. So as you can see, when they changed the legislation, they also made the benefit much higher and more attractive in 2021. So you may hear from time to time that you can earn up to $26,000 per employee with this credit. And that would be if you qualified for every period of time. You'd qualify for that $5,000 per employee in 2020, and then you'd qualify for $7,000 per employee per quarter in 2021. That is just through third quarter of 2021. They ended up taking fourth quarter 2021 off the table. So just quarters 1, 2, and 3. The credit basically offsets an employer's share of Social Security taxes on the wages that they've paid. So unlike other tax credits that impact your federal income tax return, this credit is filed on an amended quarterly 941X form. And typically your payroll company or your CPA, whoever does your payroll, would be the one to file this amended form. Let's see, as I mentioned before, even if you didn't originally qualify because you received a PPP loan, you're now eligible for this credit as well. Even if you took both PPP loans, you can still be eligible for this credit. And I will mention we do back out PPP wages. I get that question a lot. That's the legislation and the law requires us to not double count wages towards PPP forgiveness and the credit. But typically what we find is if you qualify, you're going to have plenty of wages to go around for both. So that's not usually an issue. Let's see, I kind of already covered that last point as far as the credits captured on an amended return. At this point, you've still got over a year to go back and amend those quarterly returns to take advantage of this credit. So there's no imminent deadline. We've still got certainly a lot of time to explore and see if you can qualify. So I've got this slide on 2020 and then the next slide's on 2021. They're very similar, but just kind of reiterating a couple of points. For 2020, if you're a company with 100 or fewer employees, then you're going to qualify through one of two tests. You either had a decline in gross receipts, which is basically revenue for most companies, by 50% or more, or your operations were partially suspended due to a government order. For instance, restaurants. Every restaurant out there is going to qualify under this suspended operations because they were not able to operate as normal. Even when their dine-in seating opened back up, there were capacity restrictions. So, that's something we certainly look at. On the next slide, you'll see that to qualify in 2021, the qualification actually became easier as well. Now, if you've got under 500 employees, you can qualify. And instead of having to have a decline in revenue of 50% or more, it's just 20% or more. So if during any quarter of 2021, you're down by 20% or more compared to that same quarter in 2019, then you're automatically going to qualify for the credit. And that means that the wages you paid during that quarter and automatically the following quarter's wages are going to qualify. Again, it's the same. The second method of eligibility here is the same as in 2020 as far as having suspended operations due to a government order. And if any of you are curious if you qualify under that or if your client does, feel free to give me a call. We've actually retained the attorney that helped write the ERC to help us navigate some of these gray areas related to the partial suspension, because there are definitely some gray areas as to which companies should and shouldn't qualify. So we feel like we've got a good support system having that attorney retained, and we feel like our approach around that is a solid one that a lot of our CPA friends are appreciative of. It's not too aggressive there. Let's see. Here's an example to walk through. If a company has 20 eligible employees and they ended up qualifying wages in both 2020 as well as just the first quarter of 2021, then they're going to receive up to 100,000 in tax credits for the wages paid just on those 20 employees. They're going to earn the 5,000 times 20 for 100,000, and then for the wages paid in Q1 of 2021, since the benefit went up, they're going to earn that 7,000 times 20 for another 140,000. So, total of 240,000 in this example for a company just with 20 eligible employees. So as you can see, the dollars are adding up very quickly. Megan, any questions on the ERC that you're seeing yet?
Yeah, and so one that you may have just answered, but are there benefits of the ERC tax credit? Are they the same for large or small employers?
The benefits are the same. It's just whether or not you can qualify. So the examples that I've walked through and the qualification I've talked about today are for what they consider small employers. And in 2020, that's if you have under 100 employees. In 2021, you're considered a small employer if you have under 500. And one specific there to take note of is we're talking about total number of full-time employees, not full-time equivalents, but full-time employees. So you might have 150 employees, but you have under 100 full-time employees. So you would be able to qualify in both 2020 and 2021.
That was the second question. Was that right there that you just answered?
Oh, great. Okay.
Yep.
Did I fully answer the first question as well?
I believe so. I mean, it definitely makes sense. Okay.
But again, if there's any questions about qualification or would you be considered large or small employer, I can certainly help you vet that. There's no cost to just, have a phone call. I can kind of help walk you through that what that would look like. I will mention we've been able to do credits for some companies that are considered large employers. So over 100 full-time employees in 2020 or over 500 employees in 2021. The challenge with that is the way the legislation is written is that we have to, you would only qualify for wages paid for work not performed. And we found that that's really hard to identify. So if you continued paying a certain department, for instance, in 2020, but they just were not working at all due to some change in your business, then those wages would qualify for a large employer. But again, if you had under 100 full-time employees in 2020 or under 500 full-time employees in 2021, you don't have to worry about that at all. We would just take a look at all the wages, assuming you qualified under one of those eligibility methods, either having that decline in revenue or having a government order that partially suspended your business operations.
Gotcha. That
Are there
makes
any
sense.
other questions about that?
Let me see. Yeah, so there was one more, and it may be jumping ahead a little bit, but does the employee retention credit, does that have to be paid back, or is it a fully refundable?
It does not. It's fully refundable. In fact, it's taking about 6 months for our clients to get their refund checks, but once you submit that amended 941X quarterly payroll return, and you're going to submit that for each quarter you qualify, once you submit that, the clock starts ticking, and about 6 months later, you're going to actually just get a refund check for this credit amount, and it does not have to be paid back. So it's a pretty simple process, as long as you can be patient to get that refund check.
Perfect. That is all we have so far.
Okay, great. Well, that's really what I wanted to share on the various credits we cover. I will say, especially with the ERC, there's a lot of information out there that can be confusing because the legislation has changed multiple times. So you might read an article or pull up some information online and it's not accurate as far as eligibility or how the credit's taken today compared to what it was at that time. So if you have any questions at all, my contact information is here. You can email or call me, and I'm happy just to answer any questions. If your CPAs have questions, I'd love to be a resource for them. But I would really just say that with all of these tax credits, they provide a quick and easy opportunity to help you offset your liabilities, whether it's your income tax liability, your payroll withholding, or in the case of the ERC, just get a refund check back to put more cash back in your pocket, because it's been a rough couple of years for a lot of businesses. So if you haven't taken the time to explore these credits, it's certainly worth just spending a little time, seeing if you qualify. And if you don't, at least you're knowledgeable of it, and it might be something that you qualify for down the road.
Perfect. We did have a question come through. What if a company doesn't have a tax liability?
Okay, so in that case, if a company does not have a tax liability, there is the one Georgia state credit I mentioned, the job credit, that can offset your payroll withholding. So that's one credit you can use, even if maybe you have losses that are being carried forward, or just for some other reason you don't have an income tax liability. You could potentially qualify and use that job credit. And then with the ERC, the retention credit, it really has nothing to do with your annual tax liability. If you are paying wages and qualify for the credit, then you'll earn a credit back for the payroll taxes that you've paid. It's more of a payroll tax credit, so it really has nothing to do with whether or not you have an income tax liability. I hope that answered that.
And then also somebody did ask, what are the deadlines to qualify on the ERC? Is there a deadline?
Great question. So there is, but you've got up to 3 years to go back and amend that quarterly return. So we've still got quite a bit of time. The first quarter that qualified was Q2 of 2020. So you've still got a year even to go and do that until Q2 of next year. So yes, it's a rolling 3-year deadline. So plenty of time to explore the ERC and apply for that. And I'll say we've got a whole team that's dedicated to that just because there was such a high demand quickly for that particular credit. So we're moving through them very quickly. We can, if we find out that you're eligible or you have clients that are eligible, we can fairly quickly go ahead and calculate that and get the credit on an amended 941X return so that 6-month clock can start as far as getting that refund check back.
Perfect. I believe that is it. So we can give everybody the rest of the hour back to them. That was perfect. A lot of really good questions. I know we also, because I know it's kind of been going where a lot of things kind of cross over, with the PPP loans. And I think some people are wondering, if I get PPP, can I also get the ERC loans? And, are you able to get 2 tax incentives at the same time like that if you did get PPP?
Right. That was the main question we received for a long time. Because at one point you could not take both. And then thankfully they changed the legislation so that you could. So, I mean, you may have taken the first PPP, the second PPP. There was another credit for medical practices. There was another credit specific for restaurants. You can take all of those and still qualify for the retention credit. So again, certainly worth exploring to see if you can qualify either through the decline in revenue or the partial suspension if you haven't already looked into that.
Perfect. Well, thank you so much, Kate. This was awesome per usual. And what we'll do is we will follow up with everybody, and we'll also send a recording of this along with Kate's information. And yeah, so we will make sure to send it out. And if anybody has any questions, obviously reach out to Kate. She's our go-to person. She's helped us a lot as well. And yeah, like we said, we'll go ahead and give the rest of your 20 minutes back to you and hopefully go finish your lunch.
Yeah, thank you, everybody. Okay. And please don't hesitate to reach out if I can help in any way. Thank you.
Absolutely.
Thanks, Megan.
Thank you, guys. Y'all have a good one.
Okay, you too.
Bye-bye.